Hi, and welcome again to another edition of Market Analysis for today, May the 14th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Market about an hour prior to the U.S. session open. Well, let's get with it. Artificial intelligence, AI, hasn't taken over the world yet, but it's back in control of the stock market. The trade now looks like a little different from AI's previous red-hot run. The tech-heavy Nasdaq Composite has risen 13% in the past month, and the best performers list is dominated by AI favorites such as Palantir or utilities like Vistra, expected to power the technology. Now, it's not quite a rerun of the 23-24 AI boom. The Biden administration's vision of a strictly controlled and subsidized technology is being replaced with President Trump's big push to hawk AI to the world. That's bad news for companies like Intel counting on grants to boost American-made chips, but good news for leaders such as NVIDIA desperate to cash in. The shift was formalized yesterday when the Department of Commerce said it was reciting Biden's planned AI diffusion rules, which will have limited global sales of chips. It's positive for chip makers who will need new customers if U.S. companies begin to ease up on huge infrastructure spending. And that's another change. Some major American companies are beginning to feel the pressure from AI. Google stock tanked when Apple claimed AI is eating into the traditional search market. Amazon has had to defend its investment as its cloud computing growth lagged behind rival Microsoft. Capital expenditure growth should start slowing soon as data centers hit physical limits, which could reduce the number of companies benefiting from the wave of investment. Now, it's not a totally smooth path ahead. Trump is still considering the imposition of tariffs on foreign-made semiconductors, and the Chinese market is increasingly closed off. But AI is looking like a winner again after a few months on the back burner. So with that being said, let's take a look at what we can speculate to see in today's market fluctuation. Now let's use our tools that we have at our disposal, such as the trend-based fitness section. So let's measure this trend so far, how it's running. So let's just measure from the high, from the low to the high, and then to the low of today. So if we were to expect a continuation of this trend, we are going to be using, obviously, those Fibonacci numbers. 0.50% is not a Fibonacci number, but it's in there anyhow, because it does create a zone, a buffer. And then we have, obviously, 0.382%, which is the first level of resistance that we're going to be applying, and that'll be 21,621. So that's our first level of resistance. And the second one will be the golden ratio, which is 0.618%, and that throws us a 21,858. That's our second level. So we are getting close to an all-time high, which is I'm going to name it as what it is, all-time high, ATH, all-time high, and I'm gonna place this in white. So there we go, we have the all-time high up here, and that will be a full extension of the rally. So as far as retracement, well, in this case, let's use this whole movement anyhow also for retracement. There we go. So again, let's use the Fibonacci numbers. In this case, the 0.382, which is 20,988, which is right below that psychological value of 21,998. Two points. And then the second one will be that golden ratio. So that'll be 20,761. So let's see. So with the momentum that is being created, RSI is about to enter that overbought territory. So it could be short-lived. We could probably just see some market fluctuation towards first initially the upper Bollinger Band, and then come towards that resistance, do what would be called a pullback. How much of a pullback? We could also measure the top of the Bollinger Band, and then from here continue. That could be one of the movements for today in the Nasdaq. All right, so here we have that. Now, as far as the S&P 500, we are also close to the all-time high. We are basically just lingering from yesterday's movement. So I'm gonna use 5980, which sits right above our upper Bollinger Band. And then as far as support goes, I'm going to initially by eye. So the fluctuation of this candle is a high of 59.25 and a low of 58.35. So basically that will be like a 585 point difference. So the middle of that, I'm gonna use the middle around the middle of yesterday's fluctuation, and then yesterday's low our second, and leave those two values of resistance as they are. So let's see if those levels will be met today. Now, the Dow, it basically has just resisted through our support level that we have. So I'm gonna lower that to today's swing low and leave the same level that we have yesterday and the same level of resistance. So let's see if today the Dow, which opened with a small gap up, will fluctuate higher and just recover. So crude oil yesterday did hit basically our second level. It had a high of 63.88, almost 64. It wasn't broken. The 50-day moving average today is also just there, but today we have fluctuated below that level of resistance, which now will be a level of support. Would have been a level of support when the market opened, but now it's back to resistance, but the market has already fluctuated through that. So what I'm gonna do, I'm gonna basically just use a value matching this swing high just for today's level of resistance, second level of resistance actually. So let's do that. Then as far as support, I'm going to use 62.5 around that level, and then again yesterday's swing low. So the market could be just profit taken today. Okay, so let's keep that in mind. Nat Gas is tracing, so we are entering in this daily chart. We are in the third consecutive lower day of lower highs and lower lows. That from textbook is a downtrend. So let's use basically previous swing lows as possible levels of support. The 50-day moving average as level of resistance, and that swing high from yesterday as another level of resistance. So could we speculate that the market has already done its movement to the downside, or will it continue to move lower? Well, let's see if that be the case. Gold is retracing, so I'm gonna tighten up my lower Bollinger Band as my first level of support, and then the 50-day moving average as my second one. Then 32.75 is going to be my first level of resistance, and using that 20-day moving average or the medium in the Bollinger Band as my second level of resistance for gold. So if dollar index is is moving higher, then we probably will be seeing more pressure on the metals. Just as we've seen so far in silver, we're going to leave the same levels that we have. Yesterday, silver just basically fluctuated towards a level of resistance, and the retrace today is trending lower. So let's see if these levels will find that support for silver. Copper, again, copper is basically doing a triple top. So will it be able to find, actually it's actually drawing a ascending triangle. So we can measure the entry of the triangle. So basically this, and place it above to measure that momentum to the upside, or measure it below to measure the probability of where this will continue. So the market has basically fallen, just traded lower after making a plateau, make a coffin of congestion, a volume cluster, previous movement, a breakout to the downside, found a bottom, rallied. That rally didn't actually cover all of the previous drop, that parabolic drop that it did, and from there it continued to look lower. So as copper continues to find its tracking, we could speculate and see if we are able to find a position in the dollar index, depreciates, makes a lower move. Then we could probably speculate that the move out of this ascending triangle could be to the upside. But the market is just basically doing a lower move, so be cautious, because it could just drop as well. Let's just delete this. Let's move towards the Bitcoin. So Bitcoin, again, trading, sustaining itself above the 100,000, equal highs, basically equal lows, breakout. A breakout is imminent. How many more candles do we need to accumulate? The RSI, if you didn't notice, is overbought. So will a pullback bring the RSI back into neutral zone? That obviously the case, and then make the move to the upside. So the euro has finally recovered and fluctuated above our level of resistances, so we need to update them. The 113 is the psychological level, and then this double top here, no, wait a minute, not that one, this one, around that area, resistance. So lower Bollinger Band and 50-day moving average as my levels of support. Right, looking to continue to the upside. The pound also, so let's use the upper Bollinger Band, and 134 as resistance. Then I'm actually gonna use this area as a possible level of support, and the lower Bollinger Band for the pound. 134 is the target, and that will happen if we see the dollar index continues to fall towards that medium, because then it could rebound from there. So let's see if that would be the case, or will it recuperate and just fluctuate higher towards the 101 marker? That happens, and it'll put more pressure on the metals. And then if that happens, if we see that the dollar index makes a recovery and then fluctuates towards our level of resistance, then we could probably see that ascending triangle on what was it, on silver. It could be to the downside. That's it for me today. Have a great trading day. I'll see you tomorrow.